Everybody is talking about de-dollarization. The dollar is doomed, and it will quickly lose reserve currency status.
Is the United States dollar under threat?
Is that era of the dollar as the world's reserve currency coming to an end?
So what actually happens when the dollar loses reserve currency status? I'm going to explain that to you in 3 simple, fast steps. First, let's go over how money is created, maybe more importantly, how it is destroyed. So I've got a bank here on your left. We've got the average Joe here. He's just representing the non-bank entities in the real economy. We've got the balance sheet, assets on the left, liabilities on the right. This example is what most people think of when they think of quote-unquote money. Obviously, we're using this term loosely. We're just using it as a proxy for currency. We'll call it dollars. So the way most people think of dollars is very similar to a gold coin. So what happens is the bank has this gold coin as an asset on their balance sheet. So notice we start off with 1 gold coin. But the average Joe needs to borrow that gold coin because let's just say he wants to buy a house. So the bank lends him that gold coin. So it becomes an asset on his balance sheet, but he also has that liability because the bank lent him the money. So that loan is a liability on his balance sheet and it's an asset on the bank's balance sheet. It's like a mortgage, pretty straightforward. So then Joe takes that gold coin and trades it for a house. But he's got to pay back his loan. So he's got to go out there and earn that gold coin back. Let's assume he does that. He takes that gold coin, gives it back to the bank. Now he's got the house as an asset. The bank has their gold coin back, and everyone is better off for the transaction. And notice, we started with 1 gold coin, and we ended with 1 gold coin. This is how 99.99999% of people see the monetary system. In fact, I would argue it's how 99% of the so-called experts see the monetary system, and it is completely and entirely wrong. Let's go over to a little thought experiment here. We are going to assume that we've got the bank again, and we've got the average Joe. But this time, instead of a gold coin, we have $5 trillion. Okay, so the bank lends that $5 trillion to the average Joe. So he has the $5 trillion as an asset on his balance sheet, but those assets are a liability of the bank. Those currency units, because they were lent into existence. And as you would expect, the bank has that mortgage, or, well, $5 trillion mortgage. They've got that debt as an asset on their balance sheet, and Joe's got it as a liability. But let's say that Joe decides to pay back his $5 trillion loan. What do the balance sheets look like after the transaction? You'll notice there's nothing there. What happened to the $5 trillion? It's gone. Because the bank didn't have it to begin with, like they had a gold coin. They lent it into existence. Therefore, when that loan is paid back, the $5 trillion don't go onto the bank's balance sheet as an asset. The $5 trillion are deducted from Joe's account at the bank. Therefore, the amount of currency units go from 5 trillion down to 0 as well. Money was created, money was destroyed. In the case of the gold coin, you cannot destroy the money. This is people's perception. This is reality. And you have to understand this concept to determine what might happen if the dollar loses reserve currency status. Step number 2, de-dollarization details. Before we get into this step, I would like to encourage all of you to ask yourself, what is the definition of a global reserve currency? You think it's an easy answer, but it's actually not. As an example, is it the total percentage of dollars held by central banks in relationship to their overall reserves? Or is it the percentage of dollars maybe on private balance sheets? Or is it the percentage of global transactions that are actually settled in dollars? Now, I'm sure especially 2 and 3 would have some sort of correlation, but they are a little bit different. One other thing I'd like to point out, editor, go ahead and throw up a chart, is we can see going back to the early 1990s that the dollar actually was less than 50% of global reserves if you just look at central banks' balance sheets. Now, it still could have had the highest percentage, but it was under 50%. And I think most of you would have assumed that if the dollar got that low, then by definition, it would be losing its reserve currency status, and therefore, back in the early 90s, it would have been doomed. Especially considering today, where the percentage of dollars on central banks' balance sheets is right around 60%, much higher than it was in the early 90s. But let's go further down the whiteboard to this next section, because there's another concept that I need you to get your head around before we go over the de-dollarization details. We talked about how the majority of dollars that circulate in the world are created by lending them into existence. So in a weird way, the supply creates future demand. So by creating supply of these dollars, lending them into existence, there is future demand for those dollars because you need them to pay off the original loan plus interest. But for the rest of this step, we're going to focus on these types of dollars because 99% of the dollars outside of the United States would fall into this category. And what we're trying to do when we're thinking about de-dollarization and what happens if the dollar loses reserve currency status is we need to figure out, well, what will most likely happen to the dollar relative to other fiat currencies. Okay, so now let's go over to this balance sheet. And this is the aggregate balance sheet of the entire world outside of the United States. So we've got assets on the left, liabilities on the right. We've got, let's assume, $100 trillion outside of the United States. And I'm including the banking system, the shadow banks, the corporations, the average Joes, the non-banks, the hedge funds, the financial institutions, everybody, every single entity outside of the United States. And remember, almost 100% of these dollars would have been lent into existence. So they would be an asset on the aggregate balance sheet, but they would also be a future liability. They're the type of dollars where they are supply, but they have that intrinsic demand. So let's think this through. We've got the average Muhammad right there. We've got the average Joe. Let's say they have 2 accounts on this balance sheet. And let's just say that currently Muhammad has all $100 trillion. But you guys know that we're going through de-dollarization. I mean, we could be losing the petrodollar as an example. And the average Muhammad, he's not going to want to hold these dollars anymore. He's going to start selling his oil for, let's say, rubles or the new BRICS currency or gold, something like that. So he has no need for these pesky dollars that have just been a burden for the last 3 or 4 decades. So he wants to get rid of all those dollars. Great. Where do they go? They go from here all the way down to here. Let's say the average Joe has those dollars now. Okay, so what happens to the aggregate balance sheet? What has changed? Answer, nothing. There's still $100 trillion of assets, and there's $100 trillion of liabilities. In other words, there's $100 trillion worth of demand. Plug in any scenario you would like to. Plug in anything you hear in the mainstream media, anything you hear on social media, anything you hear from talking heads, let's say on YouTube, or quote unquote experts. And the net result will be the exact same. And I'm purposely beating this like a dead horse. Why? Because this is almost impossible for people to get their head around. But let's take it one step further. Let's say all these dollars are going on the balance sheet of all these people that don't want them, all these entities. So like, you know what, we're just going to go ahead and pay off the debt. Or maybe no one wants to hold these dollars anymore, so nobody is taking out dollar-denominated loans anymore. All right, well, what happens to the amount of dollars? You see, if those loans are being paid back, if there are more loans that are being paid back than are created, then on net balance, the amount of debt is going down. But what is happening to the amount of currency units? It's going down at the exact same pace. So let's just assume there's a lot less dollar-denominated debt, future demand for dollars, being created. And let's say there's a lot of this debt that was being paid off because no one wants dollars anymore. Great. Well, then the amount of future dollar demand goes from 100 trillion down to 50 trillion, but the amount of currency units goes from 100 trillion down to 50 trillion as well. The relationship or the ratio doesn't change one bit. So the main takeaway from step number 2 is when we go through this process of de-dollarization, and it's absolutely happening right now. There's no getting around that. And it will eventually, over the long run, lead to the dollar losing reserve currency status. So what happens then? The answer? Probably not much, especially if you're looking at the dollar relative to other global currencies. In fact, I would argue that if the dollar lost reserve currency status by one of these definitions, whichever one you choose, most of you watching this video right now wouldn't even know. Just like you didn't know that the dollar went from being 85% of central bank reserves in the late 70s, early 80s, all the way down to 45% in 1991. Step number 3. I know a lot of you right about now, your heads have just exploded. And you're probably yelling at the screen right now saying, George, this time you have gone too far. You're just like this guy that's giving me the bird. How can you say if the United States dollar loses the reserve currency status that nothing would even happen? That is absolute insanity. I mean, don't you know, George, the United States debt is at $31 trillion. It's running huge deficits. And money printer has been going burr. The Fed's balance sheet has exploded and it's only going higher. And M2 money supply has gone straight through the roof to deposit the stimmy checks, the PPP. Yeah, I get it. But let's look at a chart. The DXY. Going back to 2007. We go from 80 all the way up to 110. Now, for most of the statistics that we're going to go over, we're going to start at 2010, but I wanted to show you what happens. And editor, go ahead and throw up this chart. Now let's focus on the shaded area. You guys see that prior to the shaded area, Fed was dropping rates. We had interest rate differentials. Dollar was going down. 95 to 85. But what happened when the stuff hit the fan? Did the dollar go up or down? The dollar went straight up, right back to, call it 95, maybe 97. Why? Because There's a flight to safety, and people believe, whether it's right or wrong, the dollar is a safe haven asset, and it will likely continue to be in the future, or at least into this next recession that most of you watching this video believe we are going into at the end of 2023 or maybe into 2024. So that in and of itself, short term, should make you bullish on the United States dollar. But let's get into some of these other statistics. Since 2010, the United States debt has gone from 12 trillion to almost 32 trillion. And if we wouldn't have had the debt ceiling debacle, it would have been over 32 trillion as we speak. So that is an increase of, call it, $20 trillion, over 100%. Okay, let's go ahead and look at the deficits. Prior to the GFC, running about 500 billion. Now, they're 1 trillion plus. And let's not forget that in 2020, if you actually looked at the real numbers, the deficit would have been about $5 trillion in 1 year, for heaven's sakes. And let's not forget, money printer, go Burr. The Fed's balance sheet has gone from $1 trillion roughly to $9 trillion. Now, it has come down recently, but it peaked out, say a year ago, $9 trillion. And let's look at M2 money supply, if you'd prefer that metric for the measurement of money. That has gone from $8 trillion to $20 trillion. And I'd like to remind you, it went up by 25% in a 12-month period between 2020 and 2021. Okay, so what happened to the dollar against other currencies, against other global currencies during this time? It went from 80, 2019, it was up to almost 105. And as most of you know from watching my videos, recently it's gone all the way up to 112. And it has come down recently, but it's dropped all the way down to pretty much where it was in 2019. Way, way higher than it was in 2010, before all of this happened. So let me be very clear. I am not saying that the United States can run infinite deficits and accumulate infinite amounts of debt and increase M2 money supply to infinity and beyond with no ramifications to the dollar against other global currencies. What I am saying is, if this is your main argument for the dollar going down against other global currencies in the future, you need to tell me why the dollar didn't go down in 2010, but actually pretty much went straight up. Because that's the only way you're going to be able to know why this time moving forward, it will be different. And if you can't answer that question, I would suggest you rewatch steps 1 and 2 of this video. The main concept is, outside of the United States, the majority of dollars are lent into existence. Therefore, this creates demand for those dollars because they have to be earned back in order to pay the bank the principal plus interest. And therefore, the only way that the demand for those dollars can be satisfied is by paying back the principal, which does what? Decreases the amount of currency units that are outstanding. And this is why the dollar, relative to other global currencies, in the future probably won't do much, even if the dollar is no longer the world reserve currency and the globe has, quote unquote, de-dollarized. And for those of you paying attention, you might be saying to yourself, okay, George, well, if the principal is paid off, and it is true, the amount of currency units circulating chasing goods and services does go down. But what if the amount of currency units increases because the net lending of dollars increases. Well, in that case, we haven't de-dollarized, have we? For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist. Right here, I will see you on the next video.